Welcome back to our channel, where we simplify the world of finance and investing for you. Today, we're diving into one of the most essential financial topics, how to invest in the stock market. First things first, why should you consider investing in the stock market? Well, historically, the stock market has provided higher returns than most other investments over the long term. It's an excellent way to grow your wealth and beat inflation, but it's crucial to approach it with the right knowledge. Before you invest, let's get familiar with some basic concepts. Stocks. When you buy a stock, you're purchasing a small part of a company. If the company does well, the value of your stock rises. If it does poorly, it falls. Stock exchange. This is the marketplace where stocks are traded, like the NYSE or Nasdaq. Index. An index, like the S&P 500, tracks the performance of a group of stocks. It helps investors gauge the market's overall health. Now set clear goals before you start investing. Ask yourself, what is the purpose of your investment? E.g., retirement, a house, or your child's education. What's your time horizon? Short-term or long-term? What's your risk tolerance? Remember, higher returns usually come with higher risks. No clear goal equals no clear strategy. Types of investment strategies. There are various strategies to consider. 1. Value investing, buying undervalued stocks and holding them for the long term. 2. Growth investing, focusing on companies expected to grow significantly, even if they are expensive today. 3. Index investing, investing in index funds or ETFs to mirror the performance of a market index. How to start investing. Ready to get started? Here's a step-by-step guide. 1. Educate yourself. Understand basic investing principles. 2. Choose a brokerage account. There are platforms like Robinhood, E-Trade, or Fidelity that make investing accessible. 3. Research stocks or funds. Look at a company's financials, its business model, and overall market trends. 4. Start small. You don't have to invest a fortune. Even $100 can make a difference over time. 5. Diversify. Spread your investments across different sectors to manage risk. Remember, don't put all your eggs in one basket. Avoiding common mistakes. Everyone makes mistakes, but learning from them is key. Here are a few to avoid. Timing the market. It's nearly impossible to predict market highs and lows. Focus on time in the market instead. Investing based on hype. Don't buy stocks just because everyone else is. Do your research. Panic selling. Markets fluctuate. Stay calm and stick to your plan. Investing in the stock market can be rewarding, but it requires patience, research, and the right mindset. If you're new, start by reading books like The Intelligent Investor or using platforms like Investopedia to learn more. Thanks for watching. If you found this video helpful, give it a thumbs up and subscribe for more financial insights. Drop your questions in the comments, and let's get a discussion going.